I would like to call the Cuyahoga County Committee of the Whole meeting for Tuesday, November 13th, 2012 to order and ask the clerk to please call the roll.
Calling the roll, Ms. Conwell. Here. Mr. Jones.
Here.
Mr. Rogers. Here. Ms. Simon. Ms. Simon is absent. Mr. Greenspan. Here. Mr. Miller. Here. Mr. Brady. Here. Mr. Germana. Here. Mr. Gallagher. Here. Mr. Schron. Mr. Schron is absent. Ms. Conley. Here. There is a quorum.
Couldn't believe it. Let's do it. Are you sure?
I'd like to make a motion to excuse Mr. Schron.
It's been moved and seconded to excuse Councilman Schron's absence. All in favor say aye. Aye. Any opposed say no. Ayes have it, and he is so excused. And I would now ask Ms. Jean if there is any public comment related to the agenda.
Mr. Chairman, no one has signed in to speak.
Okay, well then we move on to the main purpose of today's meeting, which is the start of the 2012 and the 2013 annual update of the biennial budget that we passed a year ago. And we note that this is a budget update rather than a new budget. And the hope is that changes made would primarily be corrective in nature, but we do have legislative authority to consider whatever changes are needed. After today's overview, we will hear departments and agencies tomorrow starting at 9 a.m. We hope to hear all of the departments and agencies tomorrow, but if we need more time, we will continue on Friday the 16th at 9 a.m. Tomorrow's meeting will be long and lunch will be provided. On Tuesday, November 27th, we will meet in the Committee of the Whole to consider amendments and hopefully move the budget resolution to second reading and at the council meeting later that day with final passage on Tuesday, December 11th. I'm asking that anyone who has suggestions for amendment to email them to me by the end of the usual business hours next Monday, November 19th. I would also encourage you to discuss proposals with me and other colleagues informally in the meantime. Today's overview will consist of two parts: an overview of the county's general financial condition and a presentation of the specific changes contained in the budget resolution. And after each part, we'll have a round of questions. I know that Budget and Management has been meeting with the rating agencies, preparing to sell general obligation bonds and preparing for the budget process all at the same time. So we appreciate your efforts, and I now call upon Directors Steen and Rubino to start the overview.
Thank you, Mr. Chairman. Good afternoon. As the chairman stated in his introduction, our goal initially is to do a broad overview to prepare for the individual departmental hearings. And so with that as an intro, I would like to talk about revenues. Then I'm going to yield to Director Rubino, who's going to walk through a PowerPoint that details some of the changes that we're proposing, corrective changes because of staff alignments and other things that have happened this year to get our budget in line. And as I say that, I want to emphasize that the budget that you passed last year at about this time was for a 24-month period, 2 years, and it was a plan. And like with all plans, things change over time, and we've made some changes. This government's made some changes that we need to account for, and you may want to make some additional changes. But in terms of revenues, 2012, sales tax is coming in at almost 5% increase. You know that when we proposed the budget to you, we'd planned on a 3% increase. And over the course of the year, we saw revenues inching up in sales tax. And so each quarter, we would come back and adjust that if necessary. For 2013, we're anticipating a 3.25% growth in sales tax. For 2014, as you look into the out years, we're still staying at the 3% growth rate. But right now, sales tax is growing at an annual rate of about 5%. Property taxes experienced a reduction in assessed value that we've all read about extensively of 5.7%. That percentage is a little bit different because that's the decrease in assessed valuation that we collect taxes on. And when we talk about decreases in real property or commercial industrial property, I should say residential real property or commercial industrial property, those percentages were slightly different. The 5.7% reduction in assessed valuation will lead to about a 5% reduction in real estate taxes collected countywide, which is approximately what we've shared with council before when we did the budget. In real dollars, that comes out to about $16 million. Next year, we'll have $16 million less in real estate tax revenue in 13 than we had in 12. Charges for services are expected to remain mostly flat, but we are seeing a 5% growth in real estate related fees. That's a positive. Real estate transactions are increasing in the county. And as I've shared with this council, I believe that the property tax revaluation, the reappraisal that we've just gone through, as we've lowered values in some areas, many areas of the county, we're at a low point now. We're starting to see sales inch back up. We're starting to see prices inch back up. And more importantly, we're seeing fees related to those sales inch back up. That's a very, very positive sign. Investment revenue will drop just over $4 million in 13, and it'll remain flat in 14. Quite simply, I don't think investment earnings can go much lower. The market as it relates to investing public funds is just really, really tough. And so you'll see that drop reflected in the material. Casino tax revenue, as this council is well aware, we didn't anticipate that, and it's been set aside in a separate fund at your direction. We still anticipate about $1.6 million coming in this year, about $6.5 million next year. We do believe that could go to between $9 and $10 million when all the casinos are fully operational, which would be in 2014. As I stated, we're going to see a drop in real property tax revenue countywide of about $16 million compared to what we collected this year, actual collection, $60 million down. Local government fund will drop to 50% of the level, it'll see a 50% reduction in 2013. There is no anticipation that the state is going to begin restoring local government revenues. Again, this was anticipated when we did our budget. We knew what the state cycle was going to be, so the reduction in local government fund will be fully put in place. There may be the potential loss of other federal revenues in 2013. None has been budgeted for or anticipated. We await the new Congress, the new Senate, and the President upon his reelection to lay out their agenda for the federal government, and we'll see how that impacts us. But at this point, we've made no modifications whatsoever for other cuts in federal funds. And with that, I'm going to ask Director Rubino to come up and go through our PowerPoint, and then we'll be glad to go through the detailed. I believe everyone's got a quarterly update, the bound copy. Was that distributed to everyone? Yes. Okay. And then we'll go through any part of that you'd like. Thank you.
Good afternoon, Mr. Chairman, members of the committee. A few items. We have a summary of the budget changes that we'll run through and provide some of the high-level information and answer questions. You also have a copy of the update document. So it's an abbreviated version of a recommended budget document. What we've provided is the written executive summary, budget schedules, and about a one-page detail document for each county agency that will go into detail on some of the changes we've made. Our intent today is to cover some of the high-level criteria and changes for the 2013 update, and we'll go through those categories and explain. This is the document that we'll be working off of. One note on this document, I noticed that on page V10, we're missing text. That's solid waste district. V10, text is missing. We'll email the complete version of that page to you tonight when we get done with the meeting. The budget header data is there, just not the text. And as Mr. Steen had mentioned, we're meeting with the rating agencies this past week. Got a nice email from one of the analysts. It contained 50 questions on county finances, so they're doing their due diligence, but we anticipate going into the market at the end of November and having a successful sale, and I think performing fairly well considering the rates that are very low right now for municipal debt. What I can do is move on to the presentation. I'm not going to go into details on third quarter. The first section of the exec summary in the book does have third quarter results. If you like, I can go over a few high points on third quarter before I get into the PowerPoint. It's in section 1, or section I. So the third quarter estimate is stable for general fund and levy fund, and we're projecting a ending surplus in the general fund of over $4 million, almost $5 million. And on the levy side, with the public assistance fund offset, we're only looking to draw down about $1 million in PA fund, or Health and Human Service levy fund reserves.
Wait, I'm sorry. Mr. Chair, could you repeat that? If you don't mind me asking. Just repeat the HHS levy component. Your statement on the HHS levy, I just didn't hear you.
For 2012, we're anticipating a draw on levy reserves of $1 million as of third quarter. I think it's reflected on page I-3. Under the top of the page I-3, the middle of that table is the Health and Human Services levy fund. You'll see a column, third column, 2012 estimate. If you look down, we have a projected deficit of $1 million in the levy fund this year.
And what did you say about the PA fund?
That's after the offset of PA fund dollars. I think it's about $4.5 million we are using to offset in 2012.
So it's really 5.5 million?
Correct. All of their operating lanes are fairly stable compared to second quarter. There's not much to report from second to third quarter. We give you the highlights. In this document, we always provide the latest projection basis as a preface to the executive summary for a proposed budget, or in this case, a proposed budget update. So that's there for your edification. If you have any questions, please contact us. In the coming days, we can certainly answer anything. But I think fairly routine quarter in terms of projection and outlook. We've shifted our focus to 2013 and making updates to the current 2013 budget. With that said, I'd like to move on to the presentation on the 2013 updates. Start with a brief overview of the type of work we've been doing the past month and a half in OBM. As you know, and as we've instructed agencies and reminded agencies, we do have a 2013 budget in place. We adopted a biennial budget. It was Resolution 291 adopted last year, I think on December 13th. So we had to shift gears this year and try to impress upon agencies to think biennially. You have a budget in place. We're proposing to make some changes to realign appropriation where necessary, to also carry impact of approved budget realignments or programs or funds that were created during 2012. But the idea is we did a lot of planning and work last year to make sure we had fairly solid and fairly accurate budget in place for 2013. Now, we expected to make changes, and of course we have, and I'll go through some of those, but we do have a budget in place for 2013. So we did make some course corrections, and I'll explain those. In most cases, we limited those changes to a set of criteria, types of changes, whether they were technical nature or related to some approved change in a program budget or level of funding. I'm going to step back for a minute on this slide. The 2012-13 budget was developed with a set of parameters or operating instructions. Those have not changed. I'm just providing this slide by way of information. We had flat salary and fringe benefit budget lines for 12 and 13. We only provided increases for approved labor agreements, and we'll get back to that point later on. No furlough days, of course. We've dispensed with that tactic for the time being and going forward also. We held at the time healthcare costs flat. We did not have final healthcare rates and the final shift in enrollment to the various plans. So at the time of budget development, we didn't have final information. So you will see we will be making some corrections to the 2013 hospitalization budget line for all county agencies based on the experience we've seen this year, and I will explain those changes. We had a basic 2% inflationary parameter applied to other expenditures and some contract lines. And then, of course, we had the impact of the state budget cuts. Those aren't going away. We have the impact of those cuts in 12 and 13, and there is no indication, there's no addition or restoration of those dollars in this proposed budget or in the 14 and 15 budget estimate years that we provide in our reporting. Any of the impacts of staffing reductions and reclassifications that occurred last year or into this year were carried forward into 2013. And any additional requests for funding were evaluated based on a base budget development process. We did approve additional dollars and we did approve realignments last year for 12 and 13. Those are already in this 12 and 13 appropriations. We're not making any changes. And then, of course, agencies supported with special revenue are expected to implement programs within those available resources. So those are just a reiteration of what we developed this current budget on. Now I'm going to jump ahead to slide 4. This is a basic summary of 2013. It's in 3 sections. Top section is the approved budget from last year for 2013. And we have 4 columns, one for general fund, one for levy fund, one for general fund and levy combined, and then an all funds column. So all funds would be everything aside from general fund and levy. So all the other funds go into that all funds category. Top section, again, is the adopted 2013. The middle section is the proposed appropriation levels for those categories. And then we'd give you the change between adopted 13 and proposed update to 13. I'd like to focus on the middle section of the table for a brief moment. We have, in the general fund, we're showing revenue increasing by about $10 million. A portion of that increase is a shift of data charges to the general fund. As we get into the consolidation of the IT, Information Technology Department, into the general fund, there's some moving parts that come into play, but that's the main reason you see a large jump in charges for services that impact that change from the 13 adopted budget to the proposed budget. Levy fund, you can see we're proposing additional levy uses of almost $7.9 million. That's the bottom of the 3-part table. You'll see that increase. And we'll come back to some of the causes of that proposed change in levy fund expenditures. The other item to note is an over $4 million drop in levy revenue. That's related specifically to the drop in assessed valuation. We had an estimate for loss of revenue in the 2013 budget, but this is on top of that estimate. The adopted 2013 budget estimate for levy had over $211 million. After second quarter, we were able to fine-tune and dial that estimate down to just under $207 million. So that 207 is the latest and greatest number. We took the 2013 estimate as of second quarter and replaced the estimate that was approved at budget time. And that's why you're seeing that $4 million drop. The impact of the state cuts were already in 2013. We pretty much knew what those impacts were. Now that we have fairly complete assessed valuations, we have a very good idea what the impact is on property tax for the Health and Human Service levy and the other levies of the county. So that's the main reason for that drop. I'm going to shift over to the last column for all funds. The number you'll see at the bottom right, that increase in total expenditures and uses of $61 million, a lot of that increase is actually for some budgetary changes for new funds or programs. I have a slide that'll spell some of those items out. There are some things that we were not capturing or including in the operating budget when we adopted that we have shown in this budget update. I'll go into the details of those. Those are basically special use and internal service fund programs or program expenditures that have supporting revenue, and I'll come back to what those are. So this is your all-in high-level view of the 2013 proposed budget and the changes from the adopted budget. And this is also in your document, this table. All these tables are in the executive summary of the budget update document. I'm going to jump to slide 5. So I mentioned that the analysts worked with agency fiscal staff and administrators to quantify a variety of changes to the 2013 proposed budget update. And we had a fairly stringent list of why would we be making changes to something that's already been appropriated. And this list is a catalog of those potential changes. And you'll see a lot of these flowing through into the actual proposal for 2013 in the agency-specific pages. But I'll just run through these. And if you have any questions on specifics, we can get into that when we talk about agencies. We updated revenue for 2013 based on our latest third quarter projection. So the analyst updated all revenue sources for all operating funds of the county as of third quarter, and we carried those updated 2013 estimates into the updated 2013 budget. So we always start with fresh revenue. We've been told for years and years, and we've carried this value that revenue is the most important part in the starting point of any budget, whether it's a proposed update or building a budget from scratch. So that's why we like to refresh the revenue picture for all county funds. We made adjustments to the employer share of health care based on What we know now is the enrollment in the various plans, and we also added an increase for inflationary growth. I'll come back to that increase later on in the presentation. In conjunction with the shift of IT department into the general fund, we reduced data chargebacks, the budget for data chargebacks in general fund budgets, since now we'll have a consolidated IT budget in the general fund, so that is more of an accounting or general fund change, and I'll come back to that also. Any labor agreements with wage increases that were approved this year would not have been included in the 2012-13 budget when it was adopted. We added adjustments to capture the impact of those approved wage increases. And if you know, the template for any labor agreement resolution that council views and approves has a section to ensure that appropriation is in place to cover the impact of those operating agreements for wage increases and other increases. So we have captured those increases in the updates. Any significant or important budget revisions that were submitted by the Executive to Council to the 2012 operating budget that were ongoing, we carry the impact of those changes into 2013. I'll give you a quick example. Court of Common Pleas, oh, not the Court of Common Pleas, the Court of Appeals, apologize. We know their personnel expenditures were shifted to the state. And council approved approximately $1.2 million reduction in 2012. We also want to show the impact of that reduction in appropriation at 13. So that's an example of a change that's part of our biweekly fiscal resolution. I know the clerk of council had a non-technical name for our resolutions, but it's that ongoing request to make incremental changes. We're carrying the significant items forward into 2013 if there's a permanent impact and it was approved. And I forget the term, Gene, I'm sorry. Any reorganizations of county budgets or budgetary realignments from within. With the fiscal office, for example, when we adopted the budget last year, we continue to make some realignments within the divisions of fiscal to make sure that the appropriations and the funding followed the programmatic expenditures and also the staff. So we've carried those realignments into 2013. Those are budget neutral. In fact, I think fiscal was reduced by approximately $3 million because of lower than expected cost for the reappraisal. In any other reorganizations, we have an ordinance providing for the creation of a consolidated communications department. We're providing for that change. The move of IT to the general fund, which I mentioned before, and a few other smaller changes related to operating budgets were included. And then any new fund program budgets that were approved by council, an example being the educational program fund. We have a request in the budget for that, and there are a few others. The details on any of these changes are provided in the respective departmental summaries of the document that you were provided today. So if you want to see the details of the changes we made, there's a write-up in a table with those changes. Let's take a look at the numbers on slide 6. The table on slide 6, and again, this is provided in the executive summary of the document. It's just a basic high-level view of the changes, the financial impact or budgetary impact in 13 by those broad categories of changes. And that's how we get to that $61.4 million change from the approved 13 to the proposed 13. And there are some significant items that I'll cover in the next slides, but this gives you a high-level view of the changes we made in the net impact on the all funds budget. Jump to slide 7. So let's talk about some of the reorganizations that were included.
Director,
Yes.
before we start on these specifics, I think I'm going to ask my colleagues if they have any questions up to this point.
I have a question. On
Okay.
the slide you were just on slide 6, are those all reductions? To get to the 61.4 million that you referred to, those are all funds, total expenditures and uses. That's an increase in expenditures.
Yes, it is, Councilman Greenspan.
So the top line that says revenue adjustment.
That's only revenue. That's not added into the total. That's just increases or changes in the revenue estimate from the approved 2013 budget.
Okay, so that number is excluded.
Yes.
Okay, great.
I should have made that point. I'm sorry.
Okay, thank you.
Anything else? Okay, please continue.
For the reorganizations that you're familiar with, we adopted an ordinance creating a centralized communications department. So we provided a budget for communications. There is a net impact on the general fund of under $200,000. think approximately half of the staffing-related costs are being transferred from other county budgets. So looking across the executive agencies that have public information officers or other communication-related staff, removing both the staff and the related funding into this consolidated communication budget per the ordinance that was adopted. Information technology, I know we've spoken about this a few times when we were getting ready to prepare for the 2013 update process. We've taken the former ISC budget and pursuant to the sections within the ordinance creating a consolidated Department of Information Technology, we're moving that, most of that budget into the general fund. It's about $15.7 million. It will, rather than being seated in a standalone internal service fund, which is an accounting mechanism or budgetary fund, we're moving those, shifting those expenditures into the general fund. And there's two offsetting budget alignments that make that impact neutral in the general fund. There were approximately almost $8 million in data charge budgets within general fund agency budgets. We reduced those down to zero. Now that the direct expenditures are in the general fund, there's no need to charge general fund budgets for IT services. The remainder of the revenue, $7.8 million approximately, will come from charges to non-general fund funding sources. That gets you to the total of covering that $15.7 million shift of the IT budget into the general fund. What we're going to be doing is mirroring the same methodology and allocation process that we use for what's known as the indirect cost plan, which is a system we recover costs for administrative overheads. We're going to take an already accepted best practice, take the IT expenditures that are now in the general fund, and use benchmarking to assign or allocate the cost of IT to non-general fund sources. So we already have a precedent or a template in place to do this. And then in that way we're in line with the ordinance creating IT. There's one other piece of the IT consolidation that you don't see on this slide. There's approximately 45 or 50 IT staff in Health and Human Services. They are being consolidated into one HHS IT budget. So that'll be part of the all-in IT budget for the county, the general fund piece, and then the group of staff and resources on the HHS side. That's budget neutral because we're not moving them out of the funding source. So new operating funds. The Western Reserve Fund, which was created earlier this year, we did not have an appropriation in place for 2013. So for right now, we have an estimate of $20 million for the Western Reserve Fund. The money coming in will be mostly from proceeds from short-term financing. The proceeds will be dispersed out in the form of loans and other economic development programs. And to be clear, when we convert the short-term financing to long-term debt, the general fund will be supporting some portion of that annual debt service. But for right now, the plan for the next year and a half to 2 years is to utilize short-term financing to start capitalizing incrementally and be able to disperse funds to cover some of the programs that are already approved. That was $20 million. Another significant item that is budget neutral, the sanitary sewer fund budgets, they make annual operating transfers of fees to the district project funds. In 2012, we were not carrying those operating transfers in the budget. We want to show those in the budget so you can see the all-in inclusive fund budget for sanitary engineer. So fees and revenue are coming in from the districts. They're then being allocated to the various district project improvement funds by way of an operating transfer, which council approves as part of the biweekly fiscal agenda in section 3. So again, we're just bringing in some activity that it really for some years had escaped the reporting that we provide for sanitary engineer. This is not new expenditures and not new money. Second change, which again is budget neutral, there is a pending agreement to bring the Board of Developmental Disabilities hospitalization plan into the county's self-insurance fund. And they'll be treated like one of the other regional entities. We have a separate hospitalization self-insurance fund for regional entities, such as municipalities. So previously, the Board of Developmental Disabilities would be paying premiums from their operating budget, approximately $15 million. They will now be paying that $15 million into the self-insurance fund, and we will be paying their claims directly like we do with the county health plan and like we do with the munis that are part of the regional health care plan. So funding is coming in, rather than paying premiums, it's coming into the fund, and we're paying the claims with that funding. That agreement is still pending. We anticipate adoption, I think by the end of the year is what I'm told. But they will be able to enjoy the same benefits of controlling the growth of healthcare costs by being in that regional plan. Some of the changes related to ongoing operating expenditures. We increased across county operating budgets approximately $5.3 million to cover the projected impact, the budgetary impact of hospitalization costs for agency budgets. Again, when the budget was adopted, we didn't have the final deployment of staff through the various plans. We now have experience. We know exactly, for the most part, what those expenditures look like and what each budgetary fund of the county is contributing into the self-insurance fund. So we have those adjustments plus a 6% inflationary rate of growth covered on the operating side of the budget. And these are based on estimates from our consultant EBI to expect 6% growth next year. Now here's a bit of good news. I think there's a good chance that potentially we'll see less than 6% growth, and I'm basing that on the experience we have seen this year. From 2011 to 2012, we now have 10 months completed, the per employee per month cost of claims has remained flat, 0% increase so far, which is a good thing. Now there are other changes expected next year, and I believe there will be some impacts related to healthcare reform that will push that rate of increase above 0 next year. We'll have to see if it's 6%, but I can tell you, based on the latest report we have seen, we're beating the estimate in 2012. So I think there's hope that in combination with changes in plan structure, being able to make course corrections because of the self-insurance basis the county uses, and the past performance, that we will hopefully beat that 6%. We'll have to see, and council obviously will be updated every quarter and where we're at. Some other changes I mentioned: bargaining unit increases. 2 areas that had agreements approved in 2012 were for sheriff staff and for CISA employees. We're providing the impact of those approved wage increases in the 2013 budget. It was not in place in 2013 because the agreements had not been adopted. And then the final adjustment on this page, based on the trends we've seen, prisoner population trends this year, we're increasing the prisoner board and care budget by almost $500,000, not $500 million. $500,000 to cover trends we've seen. Again, it's an increase over last year, but if you look back 5-10 years, the peak was $8 million a year. So we are still at $1.5 million that we're projecting for next year, still markedly lower than prior years, going back 3 or 4 years. Another page of ongoing operating expenditures. BODD had a request to increase their client services budget line by $7 million. We're providing that request into the budget. This is based on the board's projection for next year. Their board approves, they submit their budget to the executive and council for approval, but their board also approves their budget, and this is based on their anticipation of service contracts for next year. And I'd mentioned reductions in the general fund data charges by $8 million, and that's in conjunction with the IT reorganization. The decrease reduction for Court of Appeals by $1.2 million. To cover the shift of their personnel costs to the state, and various realignments and changes in budgetary levels. The other changes that are smaller in nature, if you look at the individual agency write-ups, we will cite the resolution number as far as when it was adopted and for what amount and why. So you have an idea of the changes in the reasoning behind those, that they weren't a specific or unique circumstance for the change. We're going to go back to revenue. Some of this is, I guess, repetitive since we did cover some of the points. Again, sales tax growing. We have a 3.25% assumption for average annual growth next year. So we're allotting both inflationary and economic growth next year, and that's how we're coming up with a 3.25. We dial that down to 2.5% in 15. The 5-year forecast assumes 2%. Charges, again, are flat in most categories. We are seeing an uptick in revenue related to real estate charges. That's good news because that revenue has been depressed. It bottomed out in 2010. Growth is expected, but we're growing from an abysmally low level of collections on both conveyance and other real estate related fees. Still have levels of foreclosure that are fairly high historically. We have depressed market values. So yeah, sales may be picking up, but the basis value for those sales or those transactions is still low, and it's going to remain low, or we think depressed somewhat for the next few years. And as Wade had mentioned, investment earnings, based on the latest estimate from the Treasurer's Office, we're looking at $4.2 million for next year. We don't see any way out of that until at least 2014, when short-term rates, and these are the rates in which the county is required to invest at, start increasing, and that's only going to happen when we see a full recovery on a global scale. We have a slow recovery in the U.S. Things are looking decent. They're not growing at a feverish pitch, but they are growing. When you look at globally what's happening, especially in the Eurozone, we have depressed economies or areas of fiscal difficulty within the Eurozone. And what happens is investors flee or flock to the U.S., and they invest in U.S. treasuries and other paper or investments that have implied guarantee by the U.S. government. That brings rates down on the short term, and in effect lowers our potential yield on the reserves we have invested in the portfolio. So that's why we're seeing that persistently low level of return on investment for the county's reserves. Some other revenue sources or other notes on revenue sources. Casino tax is carried in a separate fund. We received $1.6 million this year. We received our second quarter payment and our third quarter payment. The fourth quarter payment will hit, I think, end of January of next year. So there's a lag, a month lag. The third quarter payment was $1.1 million, and that's splitting our share with the city of Cleveland. That's based on having 2 casinos open for the full quarter and then the opening of the third venue, I think in Cincinnati or Columbus. Again, we're going to see a drop in property tax collections, not just the collections on real property, but also the related reimbursement revenue we receive from the state. That will go down in conjunction with the drop in property tax collection. Local government fund, as we know, we're seeing the full impact of the 50% reduction from the state. For now, for the long term, medium term, it's not coming back. We have to assume this level of funding from the state for the foreseeable future. There's one twist. I know that the formula for allocation, there was a freeze on that formula. That gets lifted after this year. Doesn't mean the amount the state is clawing back changes. It does not. They will still claw back 50%. But the revenues that pour into the undivided fund at the state can rise if income tax and other tax sources at the state rise, and that can help us a little bit. It's not going to help us much. That 50% reduction is there to stay for the foreseeable future, and that's what we've anticipated in our revenue estimates, both short-term and medium term. There is a potential for loss of federal revenue, mainly in grants for a variety of programs the county implements. A lot of those are in the justice and development area. From what I understand, TANF is exempt from sequestration. If you've heard the discussion about the fiscal cliff and sequestration, right now all we know is that the programs that come under the auspice of sequestration will be cut 7.5%. So that could be any grant the county is receiving for supplemental law enforcement, any type of development program that's subject to sequestration. The county receives interest subsidies on bonds we issued in 09 and 10. Our interest subsidy will be cut by that 7.5%. Could be about a $200,000 cut or impact on the general fund if this goes forward. So we have some idea what the impacts can be. We won't know more until the policy discussion gets serious in the next few weeks, and then we see some sort of formal adoption of changes or cuts. Expenditures by function, these charts are all in the document you were provided. Social services and justice continue to be the largest chunk of what the county does. We have a mandate to do more economic development. We're reflecting that in the Western Reserve Fund, creation of the casino tax fund, but the county is still administrative extension of the state, so you would expect to see that a large chunk of what we do is still in the administration of justice and health and human services. Total expenditures increased by $25.3 million from 12 projected, not 12 budget, but 12 projected to the 2013 update. And a lot of that increase is related to some of those larger budgetary changes that I mentioned earlier. Next table is a snapshot of general fund and levy fund balances. Start with the general fund. Projecting an almost $5 million operating surplus at the end of 12. The proposed update for 13 shows a small $700,000 drawdown of general fund reserve. Over the biennium, we are in balance. We have a $4+ million surplus over the biennium period based on current projection and the proposed 2013 update. We're still at over 35% reserve level. We're in compliance with the ordinance. And going into 14, we have continued structural balance in the general fund. Levy fund's a different story. The current estimate for 2013, we're showing a drawdown of levy reserves of 6.6 million. But when we shift to the budget update, remember the 2013 budget update, the basis was the approved budget, not the estimate. The basis was the approved budget for 12 and 13. So we're resetting the levels of appropriation. We're not using the estimates aside from revenue. For expenditures, we're resetting back to the approved 2013 level. We've added some things, as I mentioned, on top of that approved 2013 appropriation level. Right now, the proposed update shows a $16.5 million draw on levy reserve. That's after the $12 million offset from PA funds. So we're close to a $27 million structural balance, and I'll address that now on the next slide. And this table is also in the document. We have 4 columns. This is the levy fund table. I think we provided this in the second quarter document, so it's a similar table, just updated based on third quarter. The last 3 columns show the approved budget this is for the levy fund only. The 2013 estimate, so the projection. So we look at trends for revenue and expenditure. What would we project we would spend if we hold those trends and add in some assumptions? The last column is the proposed update, which is the approved 2013 plus any proposed changes to that level of appropriation. As you can see, 3 different stories there. The budget we adopted last year showed a decrease in levy reserve of $3.5 million. When we shift to the estimate, the current estimate, that drops to $6.5 million, and a portion of that is related to the estimate for levy revenue. We adopted a budget. We thought we'd bring in $211 million. We're going to bring in under $207 million. So that's one of the reasons for this shift. Expenditure levels out of the levy, the utilization out of the levy fund, there's a schedule for that, as you know. We're actually below budget in most cases for how we are deploying levy dollars to operating budgets within Health and Human Services this year. But then we look at the update column, which includes the starting point for 13 plus any of the changes we're requesting to 13, which includes $5 million and $4 million in levy revenue loss. We've identified an additional $4 million in reimbursement revenue loss from the state. Throw that in the mix with some of the other requests to increase line item budgets in a few places. We're now looking at a $15 million, almost $16 million draw on levy funds, and that is after the $12 million offset for PA. So again, the structural balance, we look in that last column. If we use the 2013 update as our basis for 2013, the structural imbalance is actually the $27 million that we mentioned earlier. So that's a concern. The question becomes, do we use the 2013 estimate along with other recommendations to try to get that proposed 13 budget more in line with the quarterly estimate or something that's more sustainable for the next 2 years as we continue making more changes in building capacity within the levy fund to make sure we're making a priority commitment to Health and Human Services in the county by way of the local match through the levy funds. It's a very important piece of work. We have not reduced Health and Human Service budgets in this proposed update. I know in some areas in 2012, the staffing related expenses are under budget. Some of the client services or contract areas are running under budget. We have not made changes to those lines in the proposed 2013. And that's for further discussion this year and going into next year. So we've left it flat.
Director, in the second last column where it says 2013 estimate, should that read Q3 like in the first column?
It should be Q3.
Okay, so it is the latest data?
Correct.
Okay.
That is not much different from second quarter.
Okay, thank you. This is an important slide, so I think at this point I'm going to break and ask for questions from my colleagues. Councilman Brady.
Thank you, Mr. Chairman. I think that some of this has been anticipated to some extent, because of the property reappraisals.
Yes.
It's going to take some time. Let the chairman and the discretion of the committee determine when that time best is. I know this is an overview, and tomorrow morning we're going to be having a discussion about this. But this, from everything I've seen, and maybe it's just my orientation, but it seems to be the most critical item in terms of this budget update to be discussed and thoroughly as possibly understood by the council. I know that's just a statement, but you know where I'm going. You know where I'm going with this. So, to the chairman, would you prefer? Should we plow through the update, or would tomorrow morning be a better time? Because this is the first, I've seen this precise information. Would tomorrow morning be a better time to have a more extensive discussion?
Mr. Councilman, I think we're doing pretty well on time, so if you have some questions that you're prepared to ask now, you should go ahead, or you can defer till tomorrow morning to either way.
Well, I think I'll defer till tomorrow morning till I have a better sense of precisely how to ask these questions.
Okay. And I can tell you that Rick Werner will be making an overview presentation before the individual department administrators present tomorrow, and he'll be addressing this. And I believe Joe Gautner may be making some contributions to the overview also.
Well, Mr. Chairman, I'm looking forward to that. Of course, I have my antennas up here and I have some concerns here, but I want to be sure
Yes.
I'm directing my energy exactly where it belongs. Okay. And so I'll defer at this time, only to say that we have some serious issues to discuss here.
Yes.
Around the Health and Human Service levy budget.
The projected ending balance and drawn reserve for 2013 is also, that impact is related to how we actually complete 2012. The year's not done yet. Once we do a reconciliation with the state ODGFS as far as what revenue came in, property tax is done. We know what we got in property tax. That's done. There'll be a final settling out of what were the final expenditures for 2012, and how did the reimbursement revenue situation shake out. So we'll have a good, clear picture when we do our operating result report in January. We'll have a good idea what the actual ending balance in the levy reserve will be at the end of 2013. That won't necessarily change the structural imbalance, but right now, we're below that 15% threshold that was set in the reserve ordinance. That number is going to shift. It's going to change once we know how we actually finish for 12. That will have an impact on that piece only, not the actual structural imbalance for 13.
Director, I have one question that I'm going to ask now, which is, as you pointed out in an earlier slide, there is a $7.88 million difference between the biennial budget for human services and the 2013 update. And you pointed out CSEA collective bargaining was $500,000, and you said changes in state and federal reimbursements
Would be the
was
rest.
$4 million.
Plus the loss in property tax revenue that we had assumed when we adopted the budget going into 12.
Well, Director, the $4 million additional difference in property tax revenues is in addition to the $7.88 million in the expenditure difference.
Correct.
So what I'm asking is if you can give me a little bit of a breakdown of where the $4 million in reimbursement shortfall came from. And also, if you could tell us, other than the 4 million on reimbursements and the 500,000 from CSEA, what makes up the rest of the 7.88 million, which is about 3 million plus?
The remainder of that difference would be in the budget for the EFS subsidy. The amount that we're showing for approved 2013 was actually about $4 million lower than the approved or the current budget for 2012. So that's the difference. So we're looking at the difference between what was approved and what's being proposed, plus the impact of the revenue loss. It gets you to that difference.
So it's in EFS?
Yes.
Okay.
If you look at the current projection column in the levy report and the schedules, you will see the 2012 projection and the 2013 projection are more in line with what we should expect.
And Director, can you give us any breakdown on where the 4 million in loss of reimbursements was composed of?
It's in two main areas. I think we were anticipating $2 million reimbursement for the final payments related to ERIP. We do not think we'll be getting those. I think it's more of a timing and how much we actually expended for ERIP costs. So that's $2 million. And we'll continue to get updates from the revenue manager in HHS. The other $2 million is a reduction of the allocations from the state ODGFS. Based on what we know about the agreement for next year, it's approximately $2 million less than what we had anticipated when we developed the 2013 budget. So that's your 2 and 2 gets you to your 4 million.
Okay. Any other questions on this piece?
Mr. Chair, I have some questions.
Yes.
Okay, thank you. On the public assistance fund, what we're going to be using 4.5 million is the proposal in 2012.
Correct.
After that, what's the beginning balance in 2013 of the PA fund?
It will be approximately $30 million, Councilman.
30 million.
Yes. I believe we're projecting right now we have 35 million. So we're looking at a $4.5 million utilization for 12. And right now we're proposing 12 million in 13 and then 12 million in 14, all things remaining the same.
So this resolution 0232 that's before us, you're asking us to utilize $15.75 million of the current reserve.
Of the levy reserve.
Of the
Not the
levy
PA, the
reserve,
levy, yes, correct.
Of the levy reserve.
Correct.
With that and looking forward and understand that we have the ability to use the PA fund and the HHS levy fund almost interchangeably, which is backstop. Why if we know in 2013 we're going to need almost $16 million from the Health and Human Service levy and another $4.5 million from the HHS levy, 20 million. Why are we not doing anything to curtail expenses if we know revenues are going to be flat? Because right now we're at a budget and we're relying on our savings. Our budget's not balanced, and we're using reserves to balance the budget. Yet I don't see a proposal to bring the two in line. What's the executive's plan? Balance the HHS spending.
Councilman Greenspan, I think that discussion will ensue starting tomorrow as far as recommended changes, not just for next year, but going into 14 and 15.
Well, sure, because what happens is we start, if you don't include, and I'm assuming in these reserve balance to expenditure percentages in 2013 updated 11.9, remember our threshold is 10%, but that does not include, I'm assuming the the PA balance in the 26.5 million. So if you add the PA reserve of 25.5 million to the balance here of 26.5 million, you get to about 52 million that's available, correct?
Yes.
Okay. And if that's available, that's fine. It obviously increases the percentage. We're not bouncing right on the 10%. But we're not doing anything to control that. I mean, this proposed budget estimate, I would assume, would encapsulate what's going to be presented to us tomorrow, unless what you're saying is that during the presentation tomorrow from Director Warner that we're going to see this 223 million number proposed to be reduced. Is that correct or no?
Well, Councilman Greenspan, I think the idea is to begin the discussion of how does the county effectively build capacity in the levy fund, and there are really 4 or 5 fiscal tools in which to do that with. And those are either reducing program expenditures, finding new revenue, looking for revenue from the state. It's probably not going to happen. Shifting some of the uses that are currently being paid out of levy fund for justice programs, shifting those back to the general fund, and other areas where you could make reductions or do things either more efficiently or use less people to do them. So that's really the discussion. How do you build capacity starting next year and going into 14 and 15? That's the discussion that has to be had. For us to make some formulaic reduction across the board based on the projection, we thought about that. We discussed it with the Director of Health and Human Services and with Mr. Gautner. We felt it'd be far more effective to begin the discussion tomorrow in committee on where we want to go as far as starting to move towards structural balance over the next really 2 to 3 years. It can't all be done in 1 year.
That's fine. So Mike, are we going to be presented with options over tomorrow, or is the executive going to come back to us with recommendations on how he intends to balance this budget?
Councilman Greenspan, I believe recommendations will be subsequent to tomorrow's meeting. I don't think you'll see recommendations starting tomorrow. I think you'll see an overview of the current HHS agency budgets with additional discussion going forward on potential changes.
So where is the expectation for those changes? Is the executive going to prepare changes for us to decide on, or are we to come up with the changes and have him opine to our
Well, Councilman, I believe
recommendations?
the administrators of the various Health and Human Service budgets would be providing recommendations to the executive to review and discuss, and then present those to the full council during this process.
During this process.
That's my anticipation, yes.
A couple other questions, if I can, Mr. Chairman. The $20 million Western Reserve Fund number that was discussed.
Yes.
Is that money is coming out of, you might have addressed it, is that money coming out of our general fund reserve, or is that bonded money that will be
That will
available?
be finance money. We're going to do short-term financing first in 13 into 14. Proceeds will come in incrementally. We're not going to go out and borrow
Sure.
20 million at once. We'll borrow incrementally. Right now, the premise is we're going to be using a short-term facility, which is essentially a line of credit from a local bank, to begin capitalizing based on deal information from development department, and we'll disperse those funds. We'll eventually get to the point where we have a large enough chunk that we will bond out long-term, and the general fund will be supporting all or a portion of the debt service related to any of the financing we do to support the Western Reserve programs.
And we have not yet identified as it relates to the Western Reserve Fund, a forgivable debt component. We know that of the $9 million that we've between the $6 million between Lincoln Electric and Phillips, 4.55 million of that is forgivable. So we have not yet come up with a protocol yet as to how to address that, correct?
Councilman Greenspan, that is in progress. I know there's been some discussions. We do realize there will be some forgivable component that will have an impact on the available principal within the fund to loan out. It's being discussed and it will be addressed.
And the same with the bad reserve for bad debt?
Correct.
Okay.
Yes.
All right, good. Thank you. The bond reimbursement, we just approved within the last 30 days for the county to recapture, I believe it was close to $60 million in capital expenditures over the past few years
Yes.
that you've done. It was about 60 million, 57
Councilman, it's a little over 60 million. About 50 is for prior project expenditures. The remainder is for new projects getting underway now.
So the remainder, the recapture of money that we've already outlaid,
Yes,
is about
exactly.
50 million. Is that 50 million included in any of the reserve numbers in the general fund?
Not in the budgetary reports. If I'll go back a few weeks, when Mark Parks, the interim controller, was presenting the county's balance sheet. And if you remember on the balance sheet, the top, under the assets, under the short-term section, the liquidity portion, which is cash and other short-term assets, that amount is currently lessened by those advances that were made over the past few years. So that number, I believe, let's say it was $844 million. It should be $50 million higher because we made basically a short-term or a 3-year advance out of those reserves to cover those expenditures. That will be filled in when we complete our financing and the proceeds come in. So you won't see it in the budget because it was not spent out of the general fund, but you do see the impact in the financial statements of the county and the balance sheet, and that's where that manifests.
Okay, and just one last question as it relates to the property taxes. You said that we saw a 5.7% decline in property tax,
Countywide,
residential,
correct.
commercial, and industrial.
Correct, yes.
In all property. But then you also made the statement that there were state dollars that we would be receiving less of as a result of the same.
Yes.
And do you know what dollar or percentage that equates to?
Councilman Greenspan, I gave you an overview, and then I can provide a detailed information as far as the individual components. But the biggest portion for property tax collection is a 12.5% roughly reimbursement from the state known as homestead exemption. And if you're collecting less, you have less value, and you collect less, the state share will come down accordingly. So that's where we're talking. We've also seen a reduction in the CAT reimbursement revenue as part of the approved state budget, so that's also decreasing and adding to that loss.
So when we talk about a 5.7% decline in property tax revenue, that's not the entire picture as to the total decline to the county as a result of the lower property prices.
Well, I'll clarify. The 5.7% decrease is in countywide taxable value. That's the 5.7. The impact on the budget is somewhere around 5% because with the voted levies, there's a little bit of growing room with the effective rates. But when we talk loss, I always speak in terms of all-in. What's the all-in loss, whether it's from direct collection or from the state reimbursement revenue? I like to give you an all-encompassing picture of what our impact is.
So that 5.7 is all,
Yes.
and that includes the homestead rate reduction?
The 5% does, yes.
Okay, all right, we just got this, so I'll have to, those were just
We can
questions
provide
off
you
the top of my
supplemental
head.
information that shows you by levy and by revenue category where the changes are, may help understand.
All right, so just so I'm clear, because I'm very concerned, I think as Councilman Brady started to allude to the fact of the HHS budget, I'm trying to understand who's going to make the recommendation to balance the budget. Is it going to be us through the recommendation of the directors, or is the executive going to present a list of proposals that we're to vote on? I guess who's driving the balance the budget ship here?
To the councilman, through the chair, when it comes to spending HHS dollars, I would assume the people driving the bus are in front of me, the executive and the director of that area. I don't think you want your fiscal officer to arbitrarily make cuts to HHS budgets. Now, if I misunderstood my role, I apologize. I thought our role was to provide an update of where we stand at the end of the third quarter, and then Director Gautner and Mr. Warner are going to come and have a very, I think, thorough discussion with you, along with the executive, about where we go. But I want to step back for a second. When we talk about 11.9%, the percentage that was approved by council was 15%. 15% at the end of 13, yes. That was approved in the budget document. If everything goes as planned right now, you'll be at almost 12% at the end of 13. We believe the 2012 ending budget will be higher than we're projecting because we won't spend out all the dollars right now we're budgeting. And we also believe that based upon tomorrow's, I guess, hearing and conversations between council and the executive, that the expenditures will go down. But I don't know if I can sit here today and give you any good answer to where that will be or how. I think that's part of this process of governing and how we need to go forward, is that this council and the executive, if he were here, and the directors need to come to some conclusion on where you want to go with that. So I'm sorry that we can't give you more answers on HHS, but I didn't believe that was the role for today's discussion.
Right. And I understand. I'm just concerned with the silent backstop of the PA fund. That sucker's going to run out in about 2.5 to 3 years. And then what? I mean, if there's no controlling of the expense, I understand we're going to figure it out. But that, we don't even see the PA fund represented here in the ending balance. And it's there, but we're going to keep drawing down 4.5, then 12, then 12. And I forget where we go in 2015. But then what? There's no, I want to make sure we come out of this with a long-term strategy to ensure that the HHS spending is at least balanced as much as we can with the revenue that's coming in, because the reserves aren't going to be there in 3 years. And that's the concern. The reserve of the PA fund or the HHS levy fund reserve, the request is to dip in almost $16 million now, in addition to $4.5 million from the PA fund. And if we continue along that path, the HHS, there will be no reserve at the current level at the end of 2015. That's where I'm going with it. So I'm just trying to understand who's going to make the recommendations to do what needs to be done. And if what you're saying is within the next couple of days, we'll hear about it, a collective recommendation, that's fine. I just want to make sure that we address it.
And if I can, Councilman, the executive, I as the fiscal officer, do agree. I think Councilman Brady alluded to this earlier. This is probably the most serious discussion you're going to have right now is about that exact issue. And I believe that the executive will have ideas for you after you are provided the information by the director. I think that was the next appropriate step, and then to hear from the executive.
I do believe that there will be a short-term component where, as part of this process, hopefully we're going to take some steps that significantly move it in the right direction. And then there's going to be a long-term process which will be beyond the scope of this update process, but hopefully where some meaningful planning will go on during the first half of 2013 to figure out how over the next 2 to 3 years do we get this structurally in balance. Any other questions on this point? Oh, yes. Councilman Germana.
Yes, I've got a couple questions, not as severe as this previous topic. One in particular is on the sanitary sewer transfers. I know all the cities that participate collects the funds. Are they spent down pretty much, or is there balance carryovers? And I think some cities actually go negative because of projects. Where exactly do we stand as far as the balances on that, or how that works?
Well, Councilman Germana, generally speaking, there's a sizable reserve or balance within the combined district project funds. The fees that come in from the residents of each district are used to both support operations, that's the staff, the equipment, the ongoing maintenance. Then based on planning, same type of planning that they utilize in public works for road and bridge projects, they know they have to make different types of capital investments and other longer term maintenance, and that's how they determine how to direct the additional funds to the individual district project budgets. It differs from year to year. They like to keep contingency in case there's some sort of emergency, some sort of unforeseen repair need. I think they're working on a way to better allocate the funding to the project funds to the districts that need it. That's been ongoing. I think we've seen some improvement over the past few years. I mean, the main reason for this adjustment was to reflect, as a matter of transparency, to see the full spend of those district funds, not just for operations, which we've always shown, but how we're deploying the dollars that are coming in from resident fees to the individual districts. I'm sure Director Tewan can provide more information, or OBM can provide information on history of the transfers over the past few years. We've added a couple districts the past couple of years, so you're seeing more revenue coming in and being deployed to the various district project funds also. But again, they have a fairly significant balance on hand to utilize for those purposes.
Thank you. The second question is on this board and care of prisoners, 490,000. And you said right at the end that it's different than 8 years ago.
Yes.
Is the population higher, or is there efficiencies? What's changing on that?
Population right now is it hovers around 2,000 or 2,100 on an average daily basis in the jail. And that is a major, not the only determining factor, but a major determining factor of how many inmates are sent out to municipal jails. What you've seen is a combination of efficiencies, better ability to house prisoners in the county jail, and some changes in policy within the justice system itself that have gotten us to reduce the amount of dollars we're spending on the board and care prisoners. The jail operations budget has increased over those few years, but has not increased at the same rate that the cost of housing inmates in outside jails has decreased. And again, there's 3 or 4 components or variables that determine how many are sent out to the municipal jails. And I think the sheriff may do better justice explaining the day-to-day determination of where they're sending inmates and how are they determining to keep inmates in the county jail.
Councilman Pettit?
Yeah, I guess I'll ask the sheriff more details about that. I'm just trying to grasp if we're doing much better than we did 8 years ago.
I think so. I think he would probably be able to provide additional information. But yeah, I think what we've seen, especially if we look at the combination of the jail operations budget and that board and care prisoner budget, that the total spend is less than it was 5, 6, 7 years ago.
Okay, thank you.
You're welcome.
We're spending less than we did years ago in this area, but it has upticked recently some after a very large decline. So we'll discuss it some more tomorrow. Councilman Greenspan.
Thank you, Mr. Chair. So just so I understand, this document is not the executive's proposed budget.
It is. These are the proposed updates. We already have a budget in place. We are providing proposed updates. We're detailing the updates in this document.
All right. Then I'm back to my confusion of my previous question. If this is the executive's proposed budget, and his proposed budget does not have any measure of reducing expenditures, the budget's out of balance, then this budget then, if it continues through 2015, will burn through the HHS levy reserve.
Councilman Greenspan, that would be the case if no changes were made, but I believe that discussion is going to be taking place in a serious manner. I mean, for us to take over and decide it's a math exercise, we know we're short X amount, OBM reduced budgets by some formula across the board, it's not going to work. It's not going to be an effective way to determine how should we be using the resources we have, how should we be making sure we maintain the critical pieces of the Health and Human Service system in the county in its entirety. That's why the discussion needs to be had with the administrative staff of Health and Human Services, the Executive Council, and related support staff, because it's too important to leave it up to math. It needs to be done humanely, it needs to be done smartly, and it needs to be done with an understanding that if you want to build capacity, you have to do it over the next year and a half, 2 years, and change the situation that we're showing right now. This assumes no changes.
My original understanding was the executives prepare a budget, present it to us, we vote on the budget. But if the plan is changing, which is great, which means we have more input in the process, then I'm thankful to have that opportunity. Yes. That's why I'm just looking at it right now. So this is not the proposed budget. This is a draft subject to discussion and recommendations by the executive, conferred by us on those adjustments. Is that correct?
Councilman Greenspan, it is the proposed budget, but just like we proposed in 2012 or 2011 rather for the biennial budget, we submitted a recommended or proposed budget. We certainly had discussion and made changes over that month and a half of hearings and other discussions. So I would, even though the budget's in place, even though we're presenting updates to the existing appropriation that was approved as part of the resolution for the biennial budget, we would expect, and I'm assuming we will see, a discussion and potential additional changes occurring as part of this ongoing process.
And I agree with your statement and the director's statement regarding where the decisions should be made and should be made at the staff level. I totally agree with that. I was just trying to understand through this exercise what the ultimate outcome is. So our outcome here is not to confer this, because this will change over the hearings we have over the next few weeks, based on proposed recommendations from the administration, how to bring the budget more in balance or utilize less of the reserves. Is that correct?
To the councilman through the chair, I think that's correct. Maybe this is semantics, but the executive put forth a budget that you all approved. So this is your budget as much as it's the executive's budget. And back to Matt's point, we didn't want to just apply math. I thought that would be, again, inappropriate for me to modify your budget. That was approved by council. And so these are the numbers that were approved. We don't anticipate those would be the final numbers, but what we're putting before you was the numbers that were approved. So this is the budget that's in place, approved by this council. I think last year at about this time. That's what we're showing you at this point. Understanding that it should be modified to find more structural balance and create capacity going into the future. That's all we're doing, is preparing for you an overview of the budget that you approved a year ago.
Okay.
Great, thank you.
Director, How much more do you have to complete your presentation?
That's all I have. I had one additional point.
Okay.
And I'll make it quick, I promise.
Okay.
In the new operating funds section, I didn't mention, because it has not been approved yet, that the county has been in discussions with the city to take over operation of the city jail. When that agreement is approved and in place, whether it's before we approve these updates or afterwards, we'll come to council requesting to create a special budget for that operation. It's not in this submission because we don't have a final agreement yet. And one other related note, the county charges the city, mainly the city clerk of courts and the courts, for the space they occupy in the Justice Center. We've been going through an audit of those charges for the past few years, and the city is reviewing both the space they occupy and the current round of charges, which amounts to about $3 million. So we're also working through that process, and there's a linkage between that lease or that set of charges and taking over the city jail. They're both being considered at the same time. So just so you know, that is an item that's related to the potential creation of this new budget. I wanted to mention that so you're aware of that.
And Director, are these changes that might come to us during this budget update process, or would it be farther down the road?
For the city jail takeover, it will probably be early next year, from what I understand. I know that there is a draft agreement, but there's still ongoing discussion on the details, how it'll be administered, how the city will be reimbursing the county for the operational control of the jail.
And Director, there's been some discussion about salary adjustments for non-bargaining personnel. And the question is whether any such is reflected in the document that we have here.
Mr. Chairman, currently, no, this proposal does not reflect increases for executive non-bargaining staff. Now, some of the elected officials' courts have already provided cost of living adjustments for non-bargaining staff. By and large, they are covering those adjustments with their existing 2013 appropriation. We've not made changes. I know there's discussion with the executive and directors on a potential request for cost of living adjustment for non-bargaining staff, and that would be a merit-based type cost of living increase from what I understand, but I've not seen a final proposal yet.
And Director, is that something that might be proposed during this budget update process, or is it something that would be farther down the line?
I think there's a chance, Mr. Chairman, that it could be presented during this process. I'm not aware of the exact timing, though. I know there were still discussions going as to the final rate and how it will be implemented.
Any other questions from my colleagues? Councilman Jones.
How much is in the investment program, the county's investment program?
In the portfolio? The current or the average market value of the county's investment portfolio is around $700 million. It goes up at the time of property tax settlement. It balloons up to about $1 billion because we're bringing in collections, and then those are settled out over the 3 or 4 week period of the first and second half collection. So at any given time, there's over $400 million that can be set in the core portfolio, which is longer term being 1.5 to 2 years, maybe 2.5. Everything else is upfront and liquid. It's in cash, it's in Star, Ohio, it's in other short-term investments, but about $700 million.
The revenue down will be down to 4.2 million in next year?
Yes.
What was it this year?
This year it's going to come in at about 7.6 million.
Was there a drop in the principal?
It's not drop in principal. It is a decrease in the amount of earnings that we can make on the principal. We do not lose principal. What we do is you see a decline in the actual return on the principal you're holding because rates are historically low, and they've been persistently historically low, if that makes any sense. And there's been no movement.
The reason for the drop was the rates.
Yes, yes.
Historically, this investment income revenue has been as high as $30 million.
It has.
But that's when short-term interest rates were 4 and 5%, as opposed to a quarter of a percentage point
Or zero.
or less, as we have now.
Thank you.
Welcome.
Anything else? Okay, well, I would like to thank you very much for your presentation. I think we got a good overview, and we hit some big things pretty good. And so I will now ask if there is any miscellaneous business. Okay. Ms. Clerk, has anybody signed in for other public comment?
Mr. Chairman, no one has signed in to speak, but at this time, I'd also like to acknowledge that Ms. Simon has joined the meeting. Let the record reflect that.
Okay. And we will resume this process with the departmental hearings, starting with the Health and Human Services, and this will be at 9 o'clock tomorrow morning. It is, we have a lot to do, so we do want to start on time, and my next question is whether there's a motion to adjourn. Is there a second? Moved and seconded. All in favor say aye. Aye. Any opposed? We are adjourned.